Hey there, welcome back to Midas Letter Live. We're here for another episode on, let's see, what is it? It's the 4th of July. Happy 4th of July, happy Independence Day to all of our American viewers. Yoo-hoo! Fireworks going off in the background, rah, 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 rah. Anyways, we have a pretty awesome and diverse show for you today because we have our first guest is actually going to be a Cobalt company. I'll tell you about them in a second, but then we're going to talk to John Fowler. John Fowler is the CEO of Supreme Pharmaceuticals, who most of you probably already know. Today we're going to spend 45 minutes doing technical analysis on some of our favorite cannabis companies and on the cannabis indices with Ben Smith, who you might recognize as the head writer of the whole Midas Letter enterprise. And we're going to talk about some of the news items today, and we're going to ramble on nonsensically about all kinds of things. But right now, if you're wondering why there's a gentleman on the screen behind me, that's because this is Simon Clarke. He is the CEO of M2 Cobalt Corp, trading on the TSX Venture under the symbol MC. Simon, thanks for joining me today.
Pleasure to be here.
Okay, Simon, now the name is pretty self-explanatory. You're obviously in the business of exploration or production for cobalt. I don't really know which it is. Tell me, what is M2 Cobalt doing right now?
We have a very large land package in Uganda, which is in East Africa. It's a unique package right next door to the DRC, the Democratic Republic of Congo, which produces 65% of the world's cobalt. So right now we have teams in the field exploring for cobalt, and we are about to move into an initial drill program later this summer.
Now, the proximity to Uganda is a good thing geographically. It sounds like it might be a bad thing geopolitically. I happen to know that the Congo is pretty much viewed as a high-risk geopolitical jurisdiction for mining companies, whereas Uganda not so much. Is that accurate?
That is correct, yes. Uganda's been peaceful for 30 years. It's had the same regime in place for 30 years. It's very pro-business. They have a big oil and gas boom going on right now. They had the World Bank go into the country 15 years ago and help them really set themselves up for business. So we found it a very investor-friendly jurisdiction and a great place to do business.
Okay, so then on the geographical, or rather geophysical extension sort of the Congo, what are your expectations in terms of the cobalt deposits that you might find there, or the cobalt mineralization? Is this going to be primary cobalt exploration, or is it going to be secondary to some other primary metal?
That's a great question. So what we found so far in our assets is we have 3 different types of mineralization. There was historic production out of Uganda back in the day, and between the 50s and 70s, Falconbridge had a very large mine in Uganda which produced primarily copper. They were not looking for cobalt in those days, but they actually produced cobalt as the byproduct. So we have assets to the north and south of that mine. We also have a very large area which is more central Uganda, which is highly prospective for cobalt as well. And that looks like it is potentially a primary cobalt with a secondary copper stream. And in that area, we also have a large nickel cobalt anomaly. So we have a varied group of assets, which is really exciting and very interesting.
Have you found that you're in competition with a lot of other junior companies in acquiring projects in Uganda, or are you more or less kind of one of the few who can actually do business in the country?
I think the uniqueness of our company is we have a team of 25 people on the ground. We're very fortunate that the lady who heads our operations up in Uganda is actually a Canadian lady, Dr. Jennifer Hinton. She's a geologic engineer, PhD from UBC, who was actually put into Uganda by the World Bank 13 years ago. And so she helped reinvigorate the mining industry, overhaul the mining code, and also define which assets were the most prospective for copper, cobalt, and various other minerals. And so when she finished her term, she stayed in country, she recognized the opportunity, and she put our land package together. So we are, without doubt, the first movers in country on the cobalt side.
Wow, and so you have a degree of experience in Uganda as well?
I've been to Uganda on 2 trips so far. My first trip was last year as we were putting the transaction together. Funnily enough, I actually grew up as a kid in East Africa, so I lived in Uganda a long time ago. So it's pretty interesting going back there. But we have a team that spent lots of time there, and again, as I say, we have a team of 25 based on the ground.
Wow, sounds fascinating. So you mentioned at the start of the interview that you were about to launch your drill program. Is that, what's the sort of scale and scope of that drill program?
It'll be an initial program. To date, we've done a lot of geochemical, geophysical work, and also built on the work that the World Bank did, which was very, very helpful in getting us started and showing us where the right areas to focus are. So we've done a lot of that work. In terms of the drill program, it will be an initial program to test 4 or 5 key targets that we've already identified through the broader work program. So, you know, probably doing half a dozen holes in 4 or 5 different targets to really test the mineralization that we're seeing through the geochem and the geophysics.
Mm-hmm. Okay, that sounds intriguing. How much money have you raised to date in the company, and how many shares are outstanding?
So we've raised about $10 million, and there's about 63 million shares out at the moment. We did the cost of doing the Uganda acquisition was about 20 million shares and about $1.5 million. So as I say, we've raised $10 million so far. We have, as at the end of May, I think we had about $4.5 million left. Most of the capital has gone in the ground. As I say, we've had a very large exploration program, and we have enough capital now to turn around and do our first phase of drilling.
Mm-hmm. The interesting thing to me about this project, I mean, I've been looking at all kinds of companies that have cobalt in the name, and almost without exception, they're companies that rely exclusively on cobalt streams being sourced from other primary metal production operations, or they're essentially real estate plays that they're looking at, you know, super low grades of cobalt in very low concentrations. And so I don't really find them, the majority of the cobalt plays are not legitimate cobalt plays is my point. And so this is why I was attracted to M2. I'm curious as to whether you have any of the major cobalt investors in any of the financings yet to date.
We have had 2 or 3 institutions came in our last financing, and you know, some of the usual kind of suspects that you would expect on that front. We have also done a lot of marketing subsequently, and I would say we have a lot of institutional investors watching us and obviously seeing how our work programs unfold and what happens as we move into the drilling program. But we do have 2 or 3 key institutional investors at this time, and we will look to attract others as we move forward. And it's a very good point you make about cobalt. And as I mentioned, historically in Uganda, the mining was for copper, and cobalt was a byproduct. But in those days, people were not looking for cobalt. The interesting thing to me is in our big area of assets in the center of Uganda, we've actually found up to 1.24% cobalt in our work programs, which is a lot higher grades than you would typically see, and certainly a lot higher grades than the associated copper that we're getting with it.
Interesting. All right, Simon, this is me putting up my hand. The next financing you do, I would like you to send me sub-agreements, please. I'm impressed with the story, and I look forward to following the development. We're going to leave it there for now, however, and I will come back to you in due course and follow up with you. Thanks so much for joining me today.
Thanks very much for your time, and of course we'll get you sub-agreements.
Excellent. All right, next up, we have John Fowler, who is the CEO of Supreme Pharmaceutical, trading on the TSX under the symbol FIRE. John? Hey, welcome back to Midas Letter Live. My guest in this segment is John Fowler. He's the CEO of the Supreme Cannabis Company. John, thanks for joining me again.
As always, happy to be here.
John, I saw you on the stage of Moses Znaimer's Idea City recently, and I was interested to hear how that went for you.
It was great. So we were invited to speak at the Idea City event and wanted to bring, I think, a unique perspective on legalization. And the whole point of the talk was legalization as a political event, hugely successful. October 17th stores will open, but unless the industry does better to produce the quality of products that consumers want, as a consumer change and as a long-term event, legalization risks failure.
How could it possibly fail?
Well, if you use an analogy, in Canada we essentially have a legal alcohol shortage. So picture, in all the LCBO shelves, nothing in there.
Found a shortage.
As an industry, we're primarily responding with low end goods, so essentially the malt liquor of the alcohol world. And I think, like alcohol, we need a range of products because there's a range of consumers.
Right.
Our target consumer, we call the cannabis enthusiast, not only is a heavy use consumer consuming weekly or more, they're spending far more than the average per month on cannabis, but they're also spending a lot per gram on cannabis because, quite frankly, they want the good stuff.
And they like to be high all the time.
Something like that.
Interesting. Recently, you had announced that you have a supply agreement with Manitoba Liquor Corporation, which I found intriguing because my understanding was that you were always going to be a wholesaler to other brands, but now you're more of a branded consumer-facing product yourself.
So to date, we've always wanted to be one step away from retail. We think retail, whether it's online with medical or brick and mortar for recreational, is a challenging business. It's a business that few are successful at, and it's not where expertise lies. We believe we can make a great brand around our proprietary flower. We can make a great brand around our downstream products from that flower, and we can work with great retailers. So retailers in the great province of Manitoba and elsewhere nationwide as we continue to succeed with listings.
Okay, so is this product going to be branded as Manitoba Liquor Store Marijuana, or is it going to be branded Supreme?
No, this will be 7 Acres. So that's our
7
consumer
Acres,
brand,
right.
our entity out in Kincardine. So when you walk in, you'll see a beautiful table like this. Sniff jars generally across the country, so it allows our aroma. We think some of the best smelling cannabis in the market to entice the consumer right away. They can smell, they can look, they can purchase, and when they take home, they're going to take home a 7 Acres branded container.
Sure. Wow, that sounds fantastic. So the rollout of the rules, October 17th, 2018, is that you mentioned earlier before the segment started, that was more or less what you were expecting to happen?
Yeah, so I think it's easy to underestimate the complexity of doing what Canada is doing. As the first G7 country to legalize and create a national market, 10 provinces playing in that market, there's a lot of laws that need to be passed and regulations. If you think federal, provincial, and municipal, there's businesses that need to be open. So I think October gives the industry enough time to get ready and put our best foot forward as we launch to 4 or more million Canadian consumers come October 17th.
Okay. Your strategy going forward, I'm going to refer to the chart here because of all of the ACMPR earliest ones, probably Supreme Pharmaceutical is one of the few ones who has not yet sort of soared into the billion-dollar capitalization range. One might argue that this represents an opportunity for investors because the market hasn't properly valued the company. Others might argue that this is the valuation you deserve. What would you say to that?
Obviously, we're looking at the former on that. For us, I think we've been successful on a number of fronts. Our initial business plan was to launch 7 Acres as a premium brand for high-quality flower. We succeeded in that. I would put our team and our facility on par with any grow I've been to, whether that's in the United States, Europe, or elsewhere in Canada. We've validated the value of our brand through preferential pricing. So our wholesale pricing has been $6 or more, and we're very excited when we're in a position to announce what our recreational pricing is going to be. All that ties into 7 Acres, I believe, is one of Canada's leading brands today. As we move forward, I think that where we'll be excited to unveil our strategy is how we're looking at proprietary products, flower being the first one, but then looking at concentrates and other downstream products as well.
Okay. What are the big catalysts in 2018 besides the obvious October 17th that are going to be representative of adding shareholder value to the whole value proposition?
So I think the big one is scale. I think scale is a big risk in this industry. All licensed producers are moving very quickly on this front. I think we're doing a better job than most maintaining our quality as we scale. So we announced recently all of our flowering rooms will be complete by the end of this calendar year, and over the next calendar year we'll hit that full run rate of 50 million grams per year.
Wow.
The second catalyst is going to be pricing. So when we're in a position to compare our pricing versus our peers, we expect that to be favorable, and I think we'll stop treating a square foot as a square foot and a kilo as a kilo and start looking at margin on a SKU by SKU basis. And the third one that's exciting to us is really unveiling our larger strategy about downstream products for the recreational market, building margin, building consumer loyalty. And the hint I'll give you is when you look at the U.S., 70% of our market is made by two categories, dried flower and concentrates, and you can expect Supreme and its brands to be a leader in both.
Okay, so you previously focused on the idea that premium dried flower would outstrip demand for the extracts in your particular market, and do you still feel that you sort of seem to modified that message a bit by including extracts now, or is that something that's always been part of the message?
So we draw a hard line between what we call concentrates and what we call extracts. So concentrates, your shatter, wax, products like that, they're a representation of the flower. In essence, you need really good dried flower to make high-end concentrates. That's what's driving SKU sales in the U.S., and that's what's driving margin. On the other side of that, you have your extract products, which are really molecule-based. 10 milligrams of THC or CBD. The quality of the flower doesn't matter. Internally, we call them the hot dogs. It's essentially the asses and lips of the cannabis industry.
Asses in the lips, that's a graphic analogy. The idea of these concentrates that are, in case of shadow, running to 90% and above THC, at this point, the regulatory body has no experience with that kind of potency in the world of cannabis, because there's no experience in cannabis. Do you think that those potencies are going to be permitted to continue to be available to the public on a recreational basis?
So I think, in Canada we don't have that experience, but I think if you look to the U.S. markets, whether that's Colorado, California, or any of the other emerging recreational markets, they've found ways to safely educate consumers. Going back to alcohol, we don't take the position that all we can sell is beer and we can't sell spirits. We take the position we need to educate people on the relative risks involved with higher concentration products. So I have confidence that ourselves, our industry association, other producers will be working with the government to ensure those product categories are available, because again, at 20% or more of the market, if we don't bring those consumer goods to the legal industry, we're saving that entire market for the illicit market here in Canada.
Okay, which brings me to the next point, the illicit market. We've still got over 100 dispensaries that are not affiliated or not sanctioned by ACMPR, are not going to be legal, are the illegitimate source of cannabis that has been supplying 100% of the recreational cannabis market since, call it, 1965. Do you think they're just going to pack up and go away as soon as the rules kick in, or do you think that there is going to be potentially a constitutional quagmire in the courts as a result of Canada saying you can grow but you can't?
So fundamentally, we had prohibition for almost 100 years, and it failed miserably its policy objectives. In essence, we had demand for cannabis, and we chose a very restrictive supply-side response. Entrepreneurs, pot dealers, if you will, found a way to supply those Canadian consumers. The same will be true as long as Canadian demand chooses illicit cannabis. The only way we can be successful is to provide Canadians with the quality they want, the price points they want, the range of assortment. So, it doesn't all have to be high-end flower like 7 Acres. There's going to be lower-end product service from other brands as well.
Right.
And only if we can satisfy the consumer demand can we hope to get rid of the illicit supply chain.
All right, John, we're going to leave it there for now. Thanks again for joining us today.
My pleasure. Thank you.
Well, what did you think of that there, lovely internet viewers? Anyways, we're back here, Midas Letter Live. I am going to now talk to you about some of the more interesting news items of the day for your dining and dancing pleasure. Why? That's Wolfgang inviting me to the ball game. I can't go to the ball game. Behind home plate seats for the New York Mets versus the Toronto Blue Jays, and I'm turning it down because I'm more interested in talking to you people out there. call me suicidal. I don't know. Anyways, today, Harvest One Cannabis, HVT on the TSX Venture, announced that they have appointed former Loblaw executive Grant Freeze as the new CEO of the company. Likely reason for the company's entire trading day halt yesterday. Grant Freeze has a 38-year career with the Canadian retail giant Loblaw's, last serving as Chief Operating Officer. I think that we are starting to see a lot of this migration from traditional industries into cannabis, and I think that's really a sign that this industry is not going anywhere soon. Anyways, Harvest One announced that they were going to grant 8 million stock options under the company's plan to directors and officers. I'm sure Grant is one of them. The options entitle the holders to purchase a share at an exercise price of 77 cents from the grant date. Fluorotech Limited, TSX Venture Test, TEST, announced that it has finalized the engineering and design of its flagship product, Complete Test, a portable cannabis testing device which is able to provide quick, accurate, and consistent test results. It's designed for cultivators, dispensaries, and anyone with a vested interest in consumer safety to test the quality of their cannabis products and to help them optimize potency yield. The desktop device will commence commercial production in July 2018, that's this month, and is expected to be available for sale in Canada by October 2018, just in time for the onset of the recreational rules, along with the first of a series of test kits that will be made available to the cannabis industry over the next year and a half. Sales to international markets will begin in the first half of 2019. Invictus MD Strategies, symbol GENE on the TSX Venture, announced that the company has received $5.77 million from the exercise of previously issued warrants and options this fiscal year. As a result, Invictus currently has 96.6 million shares issued and outstanding. It expects to use the proceeds to help fund its ongoing construction program. The company anticipates total cannabis cultivation footprint of 262,000 square feet by the end of 2018 and 846,000 square feet by the end of 2019. Can you tell I'm reading off a teleprompter? No? Oh, what's wrong with you? Invictus has approximately 9.9 million warrants and 9.4 million options outstanding. That, if exercised, would bring in an additional $19.7 million and $14.9 million in cash to the funds available to the company. I think they want you to know that they will not be going back to the market to raise additional capital as they have tons on hand. That's the message in there. Canvas MedTech Inc. They were our guest yesterday. Sean Moniz was here. He talked about the company's educational platform model. But anyways, they announced today that Steve Lotsku has exercised stock options to acquire 750,000 shares of the company. Sorry. Let me try that again. Sean Moniz is the CEO. Steve Lotsku is the COO. They have each exercised 750,000 shares. In Sean's case, 800,000 common shares. In Steve's case, in options to acquire more stock in the company at 25 cents per common share. Boy, I'm having a tough time with that one. Driving right along. LGC Capital, symbol LG, reported today that their 49% owned company, Tricomed, is advancing their 134,000 square foot multi-level GMP growing facility as their turnkey operations move forward in pouring concrete foundations. At completion, the facility will include airtight controlled atmosphere flowering chambers and processing facilities for extraction compliant with GMP standards, and expects to produce 24,000 kilograms of flower. Now that is all of the news from the Canadian cannabis landscape. We are going to talk about some of the technical analysis that our writer Ben Smith has done. Ben's joining us today in the studio. He's fighting with the computers, so some of it might not be as seamless as you think. Ben, thank you for coming in today and stopping writing for a bit.
My pleasure.
You're very prolific in the writing department. I just wanted to point out before I get there that one of the things that you viewers can now do is if you go to Midas Letter, you no longer have to watch this just on YouTube or Facebook. You can watch it live on the front page of MidasLetter.com, where we have comments. And System Deadlock, one of our viewers on YouTube, actually on the website, has said, great interview. He's referring to, of course, the one with John Fowler. And Modern Picasso, will LPs look to take over the illegitimate dispensary locations? That was a question for John. John has gone, and therefore I will answer that question. No freaking way will that happen, I don't think. John might argue with me, but I don't know. Anyways, Ben, I'm going to hand over the driving of this to you now. You've been, covering a lot of these companies from a technical aspect. I've noticed, and a lot of our readers and readers and viewers have noticed, that you seem to be right more often than you're wrong, which is kind of refreshing. And I wonder if you could take us through a couple of the scenarios that you talked about in previous articles and sort of give us the rundown of where you were right, and then if you can find one, give us an example of where you were wrong.
Sure, absolutely. I'd love to give the audience the rundown on what I'm looking at. Now, it's important to know, the first thing that's important to know is that we take a lot of factors into consideration. So I don't just look at, say, a pattern in isolation setting up. I look at 3 or 4 different things. One of them is market sentiment, for example. One of it, the pattern, what channels and support resistance lines are occurring. So there's a lot of factors at play, and a lot of people may not understand that. So I would love to bring up a couple examples, and
sure.
We'll go from there.
Sure. All right. So start with this one, I guess.
Sure. This was actually one of the ones that wasn't successful that I was going to save for the grand finale.
Oh, okay. Sorry. Feel free to jump to one of the other ones then.
Unfortunately, it hasn't been a 100% success rate, but it's been pretty good. Now, one of the more notable ones is, sorry, fighting with the computer here. You could probably tell I'm not an Apple user by nature.
Mac guy. Okay, tell you what. Let me. I'll navigate for you. You tell me which one you want up there.
Yeah, absolutely. Maybe the first tab, the Med Relief tab.
Okay.
Yeah, this is the one.
Okay, so this one. This is the. I think the problem is we have this thing maxed out to. Oh, I see. It's all selected. It's all
selected.
Okay, so what do you got there?
Okay, perfect. So in late April, I was looking at Med Relief. Of course, as an analyst, I follow the market on a daily basis and write about it, report on it. And with Med Relief, I was noticing that it was outperforming. So the first thing you want to look at is the individual equity outperforming the market as a whole? Most of the time, equities will play follow the leader and either play catch up or outperform or underperform to various degrees.
Outperform the sector.
Outperform the sector will follow the leader.
And this is back in April we're talking.
This was back in April. So the first thing I noticed with this particular chart is the outperformance right here. I think Med Relief went under about $15, bounced or came really close to the 200-day moving average, and rallied about 35% over the next week and a half.
Okay.
When the sector rallied as well. Right.
And so, what was your call in this article?
So the call was this was a breakout alert that we alerted readers at the closer to the end of April, and we noticed that it bounced heavily when the sector bounced, and then it pulled back, but it didn't pull back that much. And furthermore, it actually pulled back just to the 50, which was only a couple dollars under its high. So it tested the 50, bounced back up over the 50 and between the 100, and then the alert was issued once the stock, once Med Relief climbed over the 100 and then retested the 100-day moving average, which is this white line, and then didn't break it. So I believe at that point, if memory serves, the market had rallied. Med Relief rallied along with that, and it also pulled back rather heavily. And Med Relief was not pulling back as heavily, and also held the 50 and the 100-day moving averages. So that was the tell in this particular case.
Interesting. Okay, so then if we were to look at the, let's see if I'm going to quickly cut to, one moment, Firefox, Midas Letter. This is slow but worth it. And we look at, what was the symbol for ELEAF? Go. So the reality is, sorry for the clunkiness, everybody. We're just sort of starting to figure this stuff out for ourselves, and it's a little bit of a learning curve. So now if we go back to April and we look at that breakout, you were saying buy, essentially. The pattern was saying buy.
It was saying, 100% it was saying buy.
And so from a technical analysis viewpoint, you would have had anybody who acted on that advice would have got in at just under $20 and would be looking at a near 50% win just in the last 3 months. That was one of the things where when I saw that, I was like, boy, you're not just able to string a few sentences together. You actually have a good analytical ability to read a stock chart. So again, viewers, I can't understate the value of what you're missing here. If you're not watching, is Ben's technical analysis is pretty awesome. Okay, so let's look at another one now. Hold on, again, this thing going to be a little bit. So which one of these do you want to talk about next?
Okay, the next one is Canada Royalty.
Okay.
That one came out on May 8th, I believe. The alert was issued. All the readers of Midas Letter would have received it at that point. Again, the dynamic is pretty much the same here. So we have a long consolidation pattern, and it was just starting to peak up above that, and above its most recent peak, which is technically significant. We also have it stretching up above the 50-day moving average as well, and the 100-day moving average. So we issued the alert somewhere around right here, where it was just breaking up above its more recent peak. It had built up past the 50 and the 100, so it was significant. And furthermore, there was, again, a lot of outperformance vis-a-vis the sector. So the sector, I don't think, was particularly bouncing at that particular time.
Right.
And Canada Royalty was continuously edging up 10, 15, 20 cents a day, whereas some of the small cap peers were going down 1-2% on a regular basis. So that piqued our interest right there.
So that triggered you to suggest that this was a buying opportunity or an indication?
Absolutely. Absolutely. Now, the only thing I pointed out at the time was the volume remained relatively light, and usually you'd want to see a pattern of building volume, and in this case that did not happen. So that was indicated in the chart. However, if we just go down just a touch, James,
oh, sorry,
want to take over, brush up on my Mac skills. And here is another factor that we talked about in terms of outperformance. So this is the Midas Letter Small Cap Cannabis Index, Composite Index, and this is the performance from the January peak.
Okay.
And as you can see, Canada Royalty's peers had been down on aggregate maybe 40% in value. And if we, looking at the Canada Royalty chart, while this was swooning down, Canada Royalty, was cresting down as well, but not as much. And then in the recent future, or the recent history, it had been outperforming. Okay,
so now if we were to, let's see, that's Leaf. We look for Canada Royalty in here. Where is it? Canada Royalty. Oh boy, what is the symbol?
The CRZ, I believe.
CRZ, that's right. Okay, so Canada Royalty, any day now, full screen. Okay, so that was again the end of April, and what happened, Ben?
So we called it right about here. If you could see the cursor on the screen, this is where we called it. We even gave a price target. So because of the fractal and geometric nature of markets, you can, when they do break out, you can usually call a point that it's going to pivot where there's going to be a lot of resistance. So at this point, it was the high. So the immediate price target was here. And the final price target was going to be the high. And as we can see over the next few days, barring the volume, which still remained relatively weak, it's the only thing I didn't like about it, but it proceeded to basically march higher. There's a lot of green candles here. I think it went on a streak of 12 or 14 days, something like that. And it eventually went all the way up here, and its intraday high was basically 5 cents away from the all-time high. So yeah, that was a pretty good call. I think it yielded about 25% from the call date, something like that. So
So 3 months, 25%. 3 months on the previous call, 50%. So are you seeing a pattern here, audience? There's a pattern here. Okay, so essentially that you're basically 2 for 2 now. I'm assuming at some point we're going to get to a negative, but before we do that, why don't you give me another example of a positive, and I'm going to assume it's this one right here.
Okay, so this was an article I wrote about the canopy growth hugging its 50-day moving average. So it wasn't so much a call.
So this is back in March 2018.
This was back in March, and it wasn't so much a call of direction, because I actually didn't know what the direction was at that time.
Right.
So this was based on the way the price action was hugging the 50-day moving average, as you can see in the circle right here. Mm-hmm. So a lot of the times in the technical analysis world, the moving averages are just guideposts. They're not hard, buy and sell indicators. So sometimes they'll bounce off it, off a 200 moving average or 50-day. I mean, those are pretty reliable for at least a short-term bounce, but other times they'll just slice through it like butter. So as we can see with canopy growth in this instance, it spent about 2 weeks jostling back and forth with this indicator. So in my opinion, this wasn't some sort of happenstance. It wasn't by chance. There was some sort of level going on here that it was pitting bulls with bears, and they were jostling for position. Okay. So eventually, I believe, as it played out, and I believe I wrote about this as well, is it tried to make a move up here, tested a little bit below this high, and then came back down. And once it came back down the second time, I wrote an article talking about a trigger event led by Canopy. Okay. And if you want to do the research on it or look at the archives, a couple days later it came down. It was a false breakout past the 50-day moving average, and then once it passed down definitively, it triggered an industry-wide selling event. So sector was down, I think, 7 or 8% that day. Every stock got massacred. It started a 3 or 4 day period of deep selling. Once it couldn't hold that 50 day.
So in this case, you were basically saying this is a sell signal.
Well, that article, I actually didn't know which way it was going to go in terms of that particular one, because it could have went either way. So it started to go up, and then it stalled, came back down to 50, and then once it came back far enough, it triggered an industry-wide selling event, which saw the sector sell off over 8%, I believe.
Okay, so what was the call then? It wasn't a call.
In that case, it wasn't a call. It was more what to watch for if it were to sustain past that level. That wasn't a particular call.
I see.
It was just to alert our investors who want to get in, pick positions, pick starting points for staking positions.
So you were basically warning that this was likely to happen.
Yes.
And so basically you created the opportunity for people to actually keep the powder dry until this reversal happened here, and that catalyzed essentially the onset of a almost 100% gain.
Exactly. So,
boy, 50%, 25%, 100%. I could have recycled my capital in 3 trades and made 175% return.
Something like that, yes.
Wow.
If you use margin, maybe a little bit more.
Wow. That's, I don't know about the audience, but I'm impressed. I'm going to quickly now go look at the front page of Midas Letter and see if anybody is writing 21% gain. People are doing the math here. Okay. Modern Picasso is keeping us honest. I like that. Okay, but still, pretty right. Somebody only hears you on the right side of their earphones. Give that Jack a shake. I don't think it's us. Oh no, you're hearing him on the right because I'm on the left in the studio, and we actually have it stereoed out like that so that we're not actually blended channel. Hope that doesn't annoy you too much, Mr. Lancelot, but that's the reality of the situation. Okay, we're getting some good audience participation here. Now, I want to talk a bit about
one that didn't work.
The one that got away. So, I mean, we're up somewhere between 21% and a bigger number in our self-promoting aggrandizement here. But so tell me about this one.
Yeah, unfortunately, not all the calls are right all the time. If they were, perhaps I'd be,
would be working
in
here.
another vocation and not writing quite as much.
Right.
So we have a pretty good track record, but sometimes they don't always go right. So the latest one was Afria, an article that received quite a lot of acclaim and attention. So what happened here was basically a couple things. So I'm not really generally a pattern guy in terms of Head and Shoulders and a lot of the stuff that the mainstream media puts out and what to watch for. But here, when you combine it with other things that were going on, it looked good from a technical perspective. So you had the Head and Shoulders pattern, which was a little jagged. You can see it probably better down here. So you had like a 5-week-long consolidation, so of a triangle pattern. So obviously these were the highs, more specifically right here. So you had the base right here. You had a couple highs where it bounced off of, right? So you had a trend line inside the channel, which was a Head and Shoulders, and then you had the actual channel lines, which define the highs around 13, a little bit above $13 a share. Right here, three ones right here. So the call was made when it actually broke off this neckline, which is clearly defined through this purple line right here. If you just put the angle right through there. And the sector, of course, was running at that time, so you had positive convergence in the sector. Canopy growth was in the mid-40s and on a multi-day run. And when the call was issued, this was right at the high here, right at the top of the channel line. So if you, perhaps, if we just go down just a touch here. James, if you want to help me out.
Sure. Where you want to slide down?
To the bottom chart. So this is basically a close-up of what we saw above, which is more of the daily, longer time horizon. So above, the channel line was defined by here, $13.14 a share. It closed at about $13.12, I believe, when the call was made. So it closed right at the high, right? So you had the Head and Shoulders, you had the trend line, you had the channel line, which was 5 weeks in the making. A lot of energy involved with that, a lot of buyers and sellers within that position, within the channel. And you had very, very high volume in the last 2 days, which coincided with the Molson Coors talks, in which Apria is a player in those talks.
Right.
And you had a positive convergence in the sector. So it had a lot of positive things going for it. Now, unfortunately, when that call was made, literally the next day, the sector ran into a buzzsaw. So what I mean by that is, Canopy growth was at about $48, I think, peaked at around $48.40, and it basically proceeded to go straight down about 25% over the next 4 days. So it doesn't matter what breakout call you have. Apria actually held up very, very well. It in the first couple days, it actually moved above that. It traded as high as, I believe, $13.40. But the sector was just so weak, it was never able to hold $13.14 on a daily basis, which is really, you want to hold above that level on the daily chart, and that never happened. So although it traded intraday above $13.14, it never quite closed above that level, which invalidated the signal. And then over the next couple days, the sector was just so weak, everything sold off, and eventually it got out of range where it's trading right now. So bad timing. I think it wanted to break it, and it did on an intraday basis a couple times, but the market buzzsaw was
interesting. Too weak. Okay, well, so let's take a look at Aphria today. There's some comments from a couple of the viewers right now that we're going to get to in a second, but if we were to look at Aphria, and so you were suggesting that there was a buying opportunity there, but it turned into kind of like a death trap.
Yes, and I apologize to all our viewers if they took that advice. It can't always be correct. And it did want to go. Rest assured, it did want to go, but the buzzsaw was too much over the past few days for it to continue. Okay,
so our good friend on YouTube, Modern Picasso, it says, in his opinion, it's bearish for the next couple of months. It looks bearish, and so from a technical analysis, what would be your interpretation of that chart there, Ben?
Well, it very well could be. I specialize more in the short-term range of thinking, more in terms of where the move is going to go to the next peak, as opposed to more the outer range, because my area of expertise is more short-term trading, in which I was a trader for 15 years. Right. So it very well could be. I think a lot depends on what the market is doing as a sector as a whole, and where the sector is going, because everybody's really following Canopy growth right now. Right. And that's, brings up another topic about the way the sector is trading, because ever since Canopy growth is listed on the New York Stock Exchange, I think everything is trading differently, because now you have Canopy growth is not just subject to the minor influence of the TSX and it being included in that index. It's now trading off S&P futures to a large degree. You have that dynamic in there. So if the American markets are weak, it's much more. It's affecting the leading stock much more than it did before, which is in turn affecting the sector.
Right.
So everything's trading at a different dynamic right now.
Okay, so I mean, it's interesting. You're talking about, obviously the markets aren't open in the United States today, but so this is the trading to yesterday here. So are you suggesting that, I mean, so has is I guess the question I'm trying to blurt out here with quite a bit of difficulty is, are you suggesting that Canopy continues to lead the trading pattern of all of its sort of peers, but now it does so in the American context of much higher volatility because a lot greater presence, bigger volume, a lot more scalping going on, a lot of front running in front of the trades? I mean, is that, and then has that now come to characterize trading generally in any U.S. listed or cross-listed large cap cannabis company?
In my opinion, absolutely 100% it is. Ever since when Canopy has the listing now in the New York Stock Exchange, it becomes subject to S&P influences. And as we know, the American markets are a lot more volatile right now than the Canadian markets. They have been for a while. Trump tweets, or you name it, the trade war going on. So I think there's a lot more broad market influence exerted on Canopy, a lot more than it was when it was trading on the TSX, and that only exerted a minor amount of influence in a very non-volatile market. The TSX has been within a 15 or 2,000 point range within the last 24 months. So yeah, it's becoming a lot more difficult, and obviously it leads the market, the undisputed leader. So other cannabis stocks are following its lead. So yeah,
interesting.
It's definitely a different dynamic.
Our good friend Modern Picasso wants you to know that there is no need to apologize. He says viewers need to understand that calls are not 100%.
Oh, good. We have some understanding with
exactly.
Your audience.
We have a compassionate audience member.
Terrific.
Well, that's really encouraging. Okay, so now let's take a look at we'll take a look at a couple of the indexes, and so if we were to consider this, so this is our Midas Letter Large Cap Cannabis Composite Index. All the companies trading over $500 million market cap, of which there are now 9. What is the near-term trading sort of technical outlook look like for you in this chart?
Well, I think I'd have to dig a little bit deeper into it. But right now, I think looking at more of a macro view without studying the intricate details at the moment, I would say that right now it looks to me that the market is slowly consolidating or selling off, very similar to what happened in 2016, 2017. Now, I think the market, the way the price action has been, it's caught everybody for a loop, because the actual vote of Bill C-45, everybody assumed that would be the peak. And the market had a late run into legalization, into the actual vote. I think it only happened that week. A lot of people were expecting it to, to front run long before that, myself included. And then it wasn't very much of a sell-off. And then the actual, hijinks with Canopy and some of the other stocks actually came on Royal Scent, which was considered a slam dunk. So the market kind of threw everybody for a loop. And now that Royal Scent is passed, I think what we're seeing is sort of a deflationary event taking place, where people are now looking ahead to whether some of these companies are going to be able to fulfill agreements, especially some of the smaller names in the space out there. So I would say right now it doesn't look particularly bullish with the declining volume situation.
Okay.
And I would say perhaps as well that there hasn't maybe been as much news flow as as some people assumed that would happen after Royal Scent passed and some of the legalities of cannabis legalization sort of drifted aside. It's been a pretty tame news flow.
Yeah.
And you want the news flow to keep happening for to crank up the volumes and keep going in the right direction.
You bet. This is the 30-day look, and I'm going to tell you from a fundamental perspective, You know, it's interesting that sometimes the fundamentals perfectly mimic the technical indicators in that, you know, you would have thought from a fundamental basis that the vote itself would have catalyzed the big run-up and accumulation. It didn't, because as soon as the vote happened, it was suddenly the news was, well, the vote is successful, but it hasn't achieved royal assent yet. And everybody kind of went, what does that mean?
Isn't that a given?
Yeah, exactly.
Including myself.
And
I
so
thought that was the thing. I
right.
thought that was the event.
And
yeah.
so the momentum that got started here was kind of like, it was inconclusive and indeterminate and ultimately faded out. And then when the royal assent occurred, it was kind of euphoria set in. So at that point, the fundamentals kind of made sense. And so, you know, I'm looking at this, you know, the large cap index, and if, you know, with this, if we remember back here, so what was the value catalyst that drove this period of accumulation? It was the fact that BMO had come in and done the first major institutional deal. They did wasn't BMO, it was Constellation Brands had come in and bought 10% of Canopy on the back, and then there was the deal from BMO, which valued the company at, I believe it was $34 a share at the time. And so that really set up a frenzy in the whole complex, in the whole cannabis complex. Suddenly everything was under accumulation. There was this persistent euphoria, and everybody felt it was game on, and stocks ran like crazy. So they, you know, this is up here. I mean, the scale is showing for some reason it's showing, oh, okay, well this is, yeah, so this is not price per se, but this is relative performance to the zero that it started with, or sorry, it started at 1,000 in January 2015. So to date, the large cap index has returned variously 7 times capital in this euphoric phase, and it's just broken through that again upon royal assent and the vote. But just as post this euphoria phase and post this event, there is this sell-off and drifting as profits are taken in the absence of continuing value catalysts.
Correct.
And so from our perspective, from my perspective as a fundamental analyst, the next value catalyst is really, okay, marijuana is now on the shelves, and that's going to happen in October 17th, which is a blessing in disguise, because October can also be a very sort of A or B binary month. If things go sideways, if the market sells off, which in October has been, you know, historically a volatile month, and has been the month in which many bear markets begin, this is comforting to me, because this means that from a, you know, being all large cap, these are institutional holds. So when they sell off. They can sell off very quickly, but typically they don't, because they're professional, they're orderly, and so that's why larger cap indexes tend to have a narrower band of volatility. So I think we're going to see this thing drift right through the summer, because a lot of these, you know, the big institutions are not necessarily going to be sellers. They're looking at the next catalyst, which is October 17th. They're probably considering the catalyst of U.S. federal legalization. Doesn't have a date on it yet, but we're seeing more and more legislative initiatives by various levels of the federal government. And so from a fundamental basis, this is making perfect sense to me. And I don't think I'd be a buyer, but I also wouldn't be a seller, because I know there's more value catalysts coming out there.
I think so. In my thought process too is, you know, we've written about it as well. We've written about the interview. I posted the interview a few times with Vic Neufeld. I think he's right on the button in terms of whether the market going into October is going to be favorable for some of the smaller cap players. Of course, not everybody. But you know, I think the large caps will be fine in general, just because the ones that will survive, and it actually plays into the hands if some of the smaller entities aren't able to survive, because they'll be able to pick up maybe some extra production at pennies on the dollar eventually when they have to live off their income statement. But Yeah, I think, and Alan Brockstein, I believe on the program, mentioned this before. So I think if investors are looking for alpha at the present time, they're really looking for, outsized gains, sort of like the marijuana industry was in 2016, 2017, where things would run on an individual basis more and those large gains would be realized. You probably won't see that now. You probably want to maybe focus more on some of the American companies that are more speculative without federal legalization being there at the moment, or if you want to stick with Canadian marijuana stocks, stick with quality. Make sure it has a brand. Make sure it has low cost production. Make sure that it has a supply deal, reliable supply deal coming, and I think you should be okay.
Sure. Are there any particular U.S. operating Canadian listed stocks in the cannabis space that you like?
Well, right now, it hasn't been an area of focus right now because the Canadian horizon is so vast, and we're adding, I think, 3 or 4 listings a week on the CSE and other exchanges. So it's an area I'm going to be focusing a little bit more on as we go forward for investors, for our readers who are looking for alpha. Because I think if you're looking for volatility, again, for the way things moved in this country, some of the smaller caps in 2016, 2017, maybe some of the American plays are what you want to look at. Maybe something like Kush bottles, but I'd have to, get to it more in depth before posting on it.
Okay, Kush bottles. Do you happen to have the symbol for that offhand? It's not KUSH.
I don't.
Okay.
I don't. It trades on the OTC, I believe.
Yeah. So we can do Kush bottles, but I'm going to just quickly look that up because I'm interested to see how it's doing. Alan Brockstein mentioned that he was KSHB. There's Suzanne from the control room. Quick on the draw, KSHB. So let's take a look at KSHB. Now I know there's a lot of our viewers are pretty bullish on Kush bottles, so I'm interested to take a look at the fundamental outlook and see what do we got here. Oops, I'm in the wrong browser. I need to be in Firefox to see the full screen. And what was the symbol again, Suzanne? KSHW, did she say? No. We have to. KSHV, there she is. She's so good in the control room there. Viewers, we're going to have Suzanne on, and she's going to do a segment and talk about a new product at 4:20. Don't go away. Anyways, KSHB doesn't exist. What the hell? KSHB.
Here we go.
Kushco ordinary shares. So, I see. We have to do the US if we want it. Okay, full screen ahead. Now, look at that sell-off. Look at that sell-off. There is an abdication of faith if I've ever seen one. This is somebody who either really wants to hurt the stock or really needs the money.
Yeah, I'd have to see what's going on. Usually something like that is maybe a huge bought deal at a lower price where they're oversubscribing a bunch of shares or perhaps other material news. I'm not sure. But.
All right, let's see what that date was. Friday, June the 8th. So let's see what the news. Oh, okay.
There you go.
There you go.
Bought deal.
$36 million direct offering. So chances are that somebody's selling the shares they've got to participate in the offering, or it's somebody who's really ticked off about the offering and is like, I don't want to be part of that selling pressure. But so let's take a look at what they were raising the money for. So Kush bottles, I've got to admit, and I think it's safe to say that we don't follow Kush bottles as closely as some of the Canadian plays, but we're going to start following and tracking the U.S. plays because we've noticed that there's a dearth of good coverage apart from some of our good friends at, for example, 420 Investor, Alan Brockstein, of course, Jason Spadafora at the Wolf of Weed Street, among others, but who we don't know, so they're not our good friends. Anyways, so this looks like a pretty decent financing pursuant to a direct registered offering indicating no hold, 7.5 million shares, straight stock deal, no warrant for $36 million. I don't see why I would not be upset by that.
What was the price at the time? Maybe
$4.65. Well, where it is now.
Okay, and it was selling at $7 at the time, huh?
But Well, on that date, let's see, it closed at 527, 550.
So I guess the offering price, it just pretty much sold down to the offering price at that point. With no hold, I guess they could sell shares right away.
Yeah.
So it just basically sold down to the offering price.
So does that, in your case, in your estimation, looks to me like this, from a fundamental perspective, in the face of that financing, it's going to take a major value catalyst to induce some new buying, who's going to need to be present. I mean, so the only people selling here are obviously people not in that financing, because what's the point? I mean, are you really going to just sell it down for the $1.50? What are you, a Vancouver House Street promoter? I mean, come on. I'm just kidding, House Street. I love you. I'm from the House Street stomping grounds. But that's a common joke in Toronto. I just realized I probably got myself in deep cock-a-doodoo, and I'm going to be hearing from a few people. Sorry, we lost your subscription documents. You're not in the deal anymore. But, okay, so Kush looks like it could be, I mean, from what I've heard about Kush, it's going to list on NASDAQ, according to Alan.
Yep, I think so.
I think, based on what little I know and what I can tell by the chart and the sell-off, it looks to me like this is a well-cashed up company that's got good market traction, could be a buy.
I believe so, yeah.
So let's take a look at another U.S. Now, this company is U.S. listed, not in Canada. This has been a favored punching bag of both our friend Chris Perry at Equity Guru and Jason Spatafora. And I have to admit that I was pretty unimpressed with the capital structure that they came out with. They have, of course, the super voting share structure where the founders control 100% of the votes in terms of effectiveness, because the equity shareholders hold such a small voting portion. In this case, I believe it's 386 million-ish equity voting shares with a single vote each. The two founders control 8 million super voting shares that each have 1,000 votes, which gives them 8-point-some-odd billion votes to the lowly 380 million votes of the people who put the money in. Now, understand there are compelling reasons to have a structure like that. If you're an investor in that thing and you trust the founders sufficiently that you are content to give them the mandate to just get any deal done as fast as you can without a shareholder vote, this creates a situation where management is obviously 10 times more nimble than a company that has to, by virtue of its voting structure, have to call a shareholders meeting for anything really big and major, depending on what the articles dictate they can do and can't do. So I've sort of been talked into the idea that these voting structures can be, it does enable a nimbleness on the part of management. However, if you look at the sell-off in the pricing, like the couple of value catalysts, looking at their news, they've announced harvests in their state-of-the-art facility. They've opened a downtown marquee store in Las Vegas. They had another opening. They opened a New York product line. There was another one. They opened another marijuana store on the coolest block in America. I can't remember where that is. Venice Abbott Kinney Boulevard in Beverly Hills. Okay, so these are all the things that have happened since they went public, but the chart shows you that investors are not impressed. Volume is dropping off. There has been nothing to buy into those value catalysts. Now, from a technical perspective, in the near term, what does that tell you?
Well, it's hard to say right now.
Not a lot of data to go on in the historical aspect, is there?
Well, the valuation, again, I think the valuation is somewhere around $2 billion, if I'm not mistaken. Something around that area. It came public at a $2.2 billion Canadian valuation. Okay, Canadian, at around $5 a share, if I'm not mistaken.
$5.65 is the date.
$5.65, okay.
Yeah. So this is the first day of trading right here. Opened at $5.63. I guess that's post-market adjusted. Traded down to a low of $4.67 and closed at $4.95. So that's not a banner day for an IPO, is it?
It's not a banner day, but I think readers have to understand, our listeners have to understand that it's probably something that has to grow into their valuation. So if not really looking at the technicals, if I'm speaking more of a fundamental basis, I believe they had something like $9 million in revenues, a little bit under GTI Industries, which is in the same space. So it looks like it appears it could be something that has to grow into their valuation a little bit. But it's also worth noting that they're following a model that's that's been proven over time. Some people like to say, okay, maybe they're opening up modern stores. Where are the barriers to entry to that? But there's a whole bunch of marketing and branding that goes around that. I mean, there's a reason why not everybody can open up an iPhone store, right? Granted, they have their own products to go along with that, and maybe marijuana is a little bit different. But fundamentally, it's probably something that has to grow into their valuation a little bit. And technically, because it's only been trading for about a month, it's hard to say whether the declining volume, which is not happening, what's sort of happening in the midpoint of the range, is really significant at that point. I'd probably have to, dig into the details a little bit.
Yeah. Okay. Let's leave them alone. We've beat up on them enough. The MedMen concept, I really liked it, but I just didn't like the share structure, and they don't really seem to have much regard for their shareholders. It's just brutal. But okay, another company I wanted to look at today was TGOD, the Green Organic Dutchman. Now, for viewers who might not be aware, the CEO, Rob Anderson, had to resign due to a health issue, and there's a lot of sort of doom and gloom moping going on in the internet, and certainly in the share price. The news has not been well received. It's interesting because the Green Organic Dutchman, one of the things that they have done and that I wanted to talk about, and I will say that they're neither a shareholder nor a client of any affiliated companies, so I'm not under any there's no reason for me to say this, but I got to say that the share structure that they put together was one of the most impressive things I've ever seen, in that they did successive rounds starting at, I think the cheapest was 15 cents. They're all tied up as founders, but they did successive rounds at 50, and I think it was 65 or 70, and then 90, and then $1.50, and all of those shareholders, retail shareholders, were tied up for 6 months from the day it came to trade, and then they were all sort of escrowed so that nobody was selling more than 10 to 15% of their position at any given time, which has resulted in the company's ability. It went public. I mean, actually, let's see here. If we go to the full screen and we go to the 6 month, so here's where they went public, and this is pretty much what anybody would consider a banner IPO. Like, that is solid performance.
Absolutely, especially with no downside. Most IPOs at least experience some period of downside. I don't believe they really broke their base price. Their low of their IPO date around $3.60 a share. So it never really experienced any downside.
Yeah. Well, and this is the reason why, because there was none of the cheap stock was able to be sold. And so the only shares that were free trading the day it came to trade were the IPO shares, which were bought at $3.65 a share, of which Aurora had taken 20% stake in. So they valued the company. I mean, they built this company in a really interesting way, and I know Rob Anderson. He really created a special structure here. It's never been done. And then I saw on Twitter that some clown, who I can't remember the Twitter handle, but this guy came out and said that Rob had essentially implied that he had faked a medical event so he could sell his stock and retire. Is that the latest conspiracy? Well, this is so that the reason I wanted to talk about TGOD today, because I found that really offensive, that somebody who clearly has no relationship with the guy, has no knowledge of the situation, would come out and impugn the man's character so profoundly with no knowledge that is more or less reprehensible behavior. And for me, it's just one of the downsides of the whole social media thing, where guys behind an anonymous name can get up there and say whatever they want, and they're not held accountable because they're anonymous.
But you know what? That might be changing. I don't know if you're familiar with Stockhouse and the American board, American Group Inc., which was derided by 2 or 3 users over there. And I believe the court recently ruled that that Stockhouse had to reveal the names behind and the IP addresses behind those individuals, putting out undue information. So for everybody out there thinking that there are no consequences, there actually may be, and now there's precedent in Canadian law for that to happen. So
yeah, and that's not the first time that courts have ordered Stockhouse to turn over IP addresses, I happen to know. But it's one of the darker sides of the internet, and certainly of the social media. Now, in exactly 9 minutes, Suzanne Garcia is going to join us and talk about a product for the 420 new product moment, which I've been, trying to be consistent about bringing to you. And so we're going to get to that in a second. The other thing I wanted to talk about a bit that was we were going to talk about a site tour that we did in JWCA, James E. Wagner Cultivation Corporation. And so we're going to cut to that, viewers. It's a 5-minute segment of inside of the only aeroponic growing operation that we know of on the planet. So check it out.
JWCA was founded over 10 years ago. Previous to that, I was actually on disability. I had severe chronic intractable migraines. So I turned to cannabis. And within a couple of years, it turned my life around. My family joined me under the MMAR. Many of them suffered from conditions which I knew could be helped. We turned to my grandfather, James Wagner. All his life he grew a variety of things, and he grew cannabis too, and he showed me my first cannabis plant back in the day. So we're a family business, a family of patients and growers who have founded a company to bring our unique medicine to the larger group of patients here in Canada.
You grow here aeroponically as opposed to hydroponically or conventionally. What's the difference between aeroponics, hydroponics, and growing in dirt?
We eliminate any potential intermediary and provide our nutrition in the form of liquid nutrients directly to the root mass of the plant using a special type of mister spray that allows the plant to optimally absorb the nutrients that we provide. There's no chemistry involved in soil composition or in substrate monitoring. So we can optimize directly to the conditions that the plant requires. Because of the high efficiency of our system, we use less nutrients. We use, no pesticides. All of these other elements of cost, which also create work and therefore increase the number of employees required to service the plants, are simply not present when you consider aeroponics and the JWCA approach. This is our vegetative room. We've got a large group of Rockstar Kush plants. This is a terrific producer. It comes out at about 24.5% THC usually. As we come down here, we have a group of ChemDog plants. Now these plants are just getting ready to move under the screen training into their next phase. ChemDog, a beautiful plant, comes out only at about 17 or 18% THC, but it has a wonderful earthy flavor. This is one of my own personal favorite strains. We run a perpetual harvest cycle. So one of our flowering rooms every week will produce a harvest. We have 5 flowering rooms just like this one. Each of those flowering rooms can produce approximately 4 kilograms of product every week, which gives us an estimated production capacity of around 1,500 kilograms every year from this pilot location.
This is one of our sea vaults that we use to store the product. It's completely airtight, and they're stainless steel, which makes for easy sanitization. And inside we have some of our Rockstar Kush. Okay, there's actually about 1 kilogram of product in here, which translates into roughly $10,000 worth of value. So this product looks a little bit different. This is our Cannatonic. It's extremely low in THC, and it's between 11 and 12% CBD. The goal of this is to preserve the trichomes on the outside of the bud. All the cannabinoids are contained within those trichomes, and so that's why we take great care to preserve them. Looks really good, by the way.
This is the old Lear seeding manufacturing plant. We are taking it over now. Construction is well underway. I anticipate we'll have somewhere between 125 and 140 flowering rooms at this location. But on average, we're going to harvest approximately 4 kilograms of cannabis every week from every one of those flowering rooms, 52 weeks out of the year. Now that works out to about 28,500 kilograms of cannabis out of this location once we're at full production on a yearly basis. By the time all is said and done, we'll spend between $35 and $40 million building one of the most advanced cultivation facilities in the world.
What do you think? James E. Wagner Cultivation Corporation. I think it's pretty cool. Did you see the size of those buds? Like, oh my God. Anyways, it's 418, but you know what? We're going to pretend it's 420 because we're like kind of high around here all the time. And anyways, 420, at 420 each day, or I could just babble on and nonsensically till 420 actually happens. No, I'm not going to do that. But so you know at 420 every day we talk about a new cannabis-oriented product that you may or may not have heard of before, but I'm going to assume that you haven't heard of this. And joining me today for her big debut on camera is the lovely and talented Suzanne Garcia, who, if you don't know, Suzanne is actually the chase producer, the scheduler, the bookkeeper, it goes on and on. The list goes on and on. Anyways, multi-talented. Graphics controller. Sends me messages on Skype when I'm screwing up on stage, on set. Anyways.
Now they have a face to the name.
Yes. Now, exactly, Suzanne. Do you know how many of our guests have been clamoring for some female presence here?
Well, here we are.
We've been a little... Anyways, so it's 4:19. We're going to start 1 minute early.
That's fine.
What is the product of the day, Suzanne,
All right,
for 420?
So this is a little different because I think it's more geared towards women because normally we talk a lot about vaporizers and pills and things marketed towards the male demographic. And so I was just doing some research online, and I actually came across a page because Gwyneth Paltrow, I don't know, big movie star out there, but she has a lifestyle brand, and it's called Goop. And so she just had a conference or something, and MedMen actually was part of it. I know how much we love MedMen here. And so they actually gave out goodie bags at the end of the conference. That included a lot of, Gwyneth Paltrow, her products, such as like bath bombs and whatnot. Now she doesn't, I don't think she necessarily makes these bath bombs, but there is a company called Kush Queen here on the back, and bath bombs are essentially, I don't know, have you ever used one? Like Lush sells them. There's a lot of companies that make bath bombs, and essentially
you just take this thing and throw it into the bathtub,
and
boom, the bath water's everywhere. Is that how it works? I mean, I'm not a big bath bomb guy.
To some extent, but it helps. It helps with stress relief, tension relief after work.
So this is something you put I'm assuming this is a bath bomb.
Exactly. It just dissolves as soon as it makes contact with water.
What is it? What is it actually?
I think it's just salts.
Oh.
Epsom salts, I think they're called.
Epsom salts.
Epsom salts. And so, it's just supposed to help relieve tension and help you unwind after a long day at work.
Huh.
And
so do they stink?
No, they smell delightful. The ones I've tried, I don't know the ones with CBD and THC if they would have some sort of scent,
right,
or if they could mask it. But anyhow, so at the conference, they gave these out in their goodie bags, and I thought it was cool because a lot of women, I don't know, maybe I'll speak for myself, but we don't necessarily like to vape or whatnot, and so this is just a good way of unwinding. And I don't know how the CBD and THC is infused in it or what, or if you get high, you drop it and then the aroma just fills up and you're like, whiff of
so
highness.
high from my bathtub.
I don't know exactly how it works, and so I just thought, it's more so directed at the women, at a woman, female demographic. Because
so do you use bath bombs?
I've used some, yes. I haven't used Kush Queen, but maybe they could send us some samples. Plugging it in.
There we go. Free, shameless self-promotion in exchange for bath bombs.
I'll send you the address.
That strikes like a good deal. Yeah, address is at MidasLetter.com if you scroll to the bottom of the page. Make sure you send one for men too, because I got to try this bath bomb
thing.
thing.
I think they're just unisex. I don't think
unisex.
I don't know bath.
That sounds exciting. Woo! A little racy here in the later part of the show.
And so, yeah, they're just infused with CBD, THC, and they're supposed to have, not medicinal purposes, but they're just supposed to help relieve tension and stress.
Okay.
And
so Kush Queen seems to sell a lot of cannabis products.
Yeah, I haven't gone through the entire website, but they have. I mean, they have quite a lot there.
The Pride collection, gay bath bombs. You drop it in the. Next thing you know, you're talking like this and going, "Oh, let's go have some tea." No, I'm just kidding.
Go there.
I can do that. I can do that. That's not me. Hashtag me too. No, not here.
Yeah.
Anyway, so what else
different.
they got? Fashion, bath bombs, kits, topicals. Now, MedMen, one of our favorite targets here, seems to sell these things.
Yeah. So they actually, if I recall correctly, their Venice location that they're opening or have opened, they will be selling.
You know we're going to end up being MedMen shareholders.
I mean, we plug them so much.
Yeah, this is our business model. We beat the crap out of a company until the share price goes to zero, and then we buy it and promote it positively. No, that's not the business model. No, that's not ethical or legal. And I'm pretty sure that's not what we do, is it? No, I don't think so. But what a good idea. Maybe we should start doing that.
Off camera.
Off camera conversation.
But anyway, so yeah, they sell them through their chain of dispensaries. They also have a few other products. But so Goop, Gwyneth Paltrow, is curating a series of products that will eventually be available at MedMen's location.
Okay, so these bath bombs that we're looking at here, these are the Kush Queen, available on the Kush Queen website. So all joking aside, Epsom salts in bath water is supposed to have the effect of minerals on the skin and the nervous system, and the scent is supposed to relax you, and you infuse the bath bombs with some kind of herbs and essences and oils.
Exactly, and they're supposed to help, again, alleviate pain, reduce tension, and just, help you relax. But there's also other... I'm not an expert or anything, but some of them are targeted towards, they have moisturizing factors to them and whatnot. But the ones with CBD, like this, you see relief for pain, sleep for rest, love for passion.
Okay, so is this telling me do I use a whole bath bomb in each bath?
Yeah, you drop it
So this is raising the price of a bath from whatever the cost of hot water is to $13 a bath? Yeah. Well, I guess that's appealing to the sort of exclusive set that's attracted to I want a higher end bath.
Yeah.
So
for that same
this
price.
Is $13 US, I'm assuming?
Yeah, because they're a US
They're a
company.
US site. Okay, so are these going to be legal in Canada after October 17th, Suzanne?
know.
You haven't done that level of research yet.
Looked that
You're
up.
going to be the
I
expert.
will.
You're gonna. Okay, so.
Well, I don't know how it would be classified. It's like
right
because edibles.
Well, CBDs I don't think are going to be a problem if it's topical. I think they're only going to try to regulate stuff that we ingest. Interesting. Anyways, The interesting thing is, let's see, Modern Picasso here. We're going to go to the, he's got an interesting comment. That's interesting. I was wondering about whether such products existed, and here we are.
Yeah.
So again, that was the product of the day, every day at 4:20, every day that we broadcast. So let me just tell you that in the week ahead, we are going to shoot probably every day, Monday, Tuesday, Wednesday, Thursday, Friday. We're going to have Ben here for the Technical Analysis Friday. We're going to have Steve Meisner here for small cap, big time, macro industry commentary on Thursday. We're going to have special Ed Molesky here, God knows when, because he just shows up when he does. So we're not going to commit to any schedule with him.
No.
And let's see what else is going on. The week after that, though, however, we're taking the show on the road. We're going to be in California. We're going to be shooting interviews with certain luminaries who are going to be commenting on the cannabis industry. We're going to go visit a couple of the MedMen stores. We're going to broadcast via Skype live from MedMen stores. We're going to try to talk to some of the people there. We'll try to line up an interview with management. What else? We're going to go visit a couple of companies in California. We're going to visit a couple of the outdoor grow operations in some of the oldest growing territory in the United States, in Mendocino County, California. California, here we come. California. What else? Then we're going to end up in BC, where we're also going to visit some of the BC operations we haven't been to. So, thank you for watching. Those of you who are regulars, I thank you all. Mr. Lancelot, System
Modern
Deadlock,
Picasso.
Modern Picasso, Sika 1000. Nope, they're not regular, but let's see. There's a lot of questions that we didn't get to in the commentary on YouTube and on the Midas Letter website. Keep coming back. We will get to all of these questions one day. In fact, we're going to edit out the best of them, and we're going to actually respond to them one episode. We're going to have viewer question response episode where we actually hit all of them. What?
Just a Q&A.
A Q&A. No, what do they call that? Ask Me AMA. We're going to have an AMA. Ask Me Anything. Oh, yeah. I'm doing an Ask Me Anything on
Reddit.
Weed Stocks. Reddit/r/weedstocks. I'm going to be doing an Ask Me Anything. Actually, Ben, you might join me for that. There we go. This thing's just evolving before your very eyes. Oh, my God. Anyways, I think that's about it for our show. I hate to sound like the broken record that all the other YouTubers do, but please subscribe. Please hit the subscribe button. No, screw that. Hit the subscribe, hit the alert, go to our website, subscribe to the newsletter. When you get to the website, it's going to pop up and say, would you like to receive alerts? If you say yes, then you're going to know every time we're online. I know, that's too much shameless promotion. Shameless promotion. So sorry. That's all for today. See you all tomorrow.